What happens when a country decides to freeze interest rates? Okay, that happens. But what if it's not mainly about inflation, but specifically to target a red-hot housing market?
Yeah, that's quite a specific move. Makes you wonder what the plan is, right?
Exactly.
Yeah.
Okay, let's unpack this. Today, we're doing a deep dive into a really interesting decision from South Korea's central bank, the Bank of Korea, or BOK.
Hmm.
Our mission really is to figure out why they did this, what's actually going on with housing and household debt over there, and what it might mean for their economy down the road.
And we're looking at a recent article that detailed their latest monetary policy committee meeting, so we have some pretty direct insight.
Right. So the headline news. July 10th, the BOK, they unanimously decided to freeze their main interest rate at 2.50%.
Unanimous, okay.
Yeah. And this is pretty noteworthy because it follows two rate cuts earlier this year. They cut by a quarter point in February and again in May.
So definitely a shift, a pause at least.
A definite shift in strategy. And this is where it gets really interesting.
Well, the fascinating part, I think, is the reason they gave.
Right.
It wasn't primarily about hitting some broad inflation target, the usual story.
Right.
The main driver they cited was the really rapid increase in household debt.
Okay, household debt.
Yeah, and specifically how it's being fueled by a surge in housing transactions.
Yeah.
Lots of buying and selling, especially in Seoul and the areas around the capital.
Hmm.
So it really raises that question, why focus so intently on housing prices and debt right now, potentially instead of, say, cutting rates further to boost overall growth?
It signals something urgent, doesn't
It
it?
really does. It suggests this isn't just, oh, homes are a bit pricey. It's that the debt level itself is seen as a potential risk to stability.
Mm-hmm.
Something that could seriously hold back spending and growth later on.
And that urgency, it came right from the top, didn't it? From the BOK governor.
It did. Governor Lee Chang-yong, he used some pretty strong words. He expressed significant concern.
Significant concern.
Yeah, specifically that the pace of housing price increases, particularly around the capital, is actually faster now than it was back in August last year.
Faster than last year, wow.
And he emphasized that a key policy goal now is, I'm quoting loosely here, stabilizing expectations to stop those capital region prices from climbing further, and crucially, managing household debt.
And he called the debt level,
Yeah,
what was the word?
critical. He sees it as being at a critical level.
Critical. That's serious language.
It really is. The implication is that it's already constraining consumption, people spending money, and therefore overall economic growth, if everyone's just servicing debt.
There's less left over for everything else. Makes sense.
And connecting the dots here, it's not like the BOK is acting completely alone on this.
Ah, right. There's coordination.
Exactly. What's also quite striking is Governor Lee actually went out of his way to praise the government's recent bold real estate policies. He called them the right direction.
Okay, so the central bank and the government are trying to work together on this.
It definitely looks like a coordinated push, which, frankly, you probably need for something as big as the housing market.
So what did the government do? What are these policies Governor Lee liked?
They announced something called the 6.27 real estate measure.
6.27 measure. Okay.
And the key part of that, for this discussion, is that it caps the loan limit for buying homes in the capital region, sets a maximum amount you can borrow,
How much?
600 million won, which roughly translates to maybe around 440,000 US dollars, give or take the exchange rate.
Okay, so a limit on borrowing in the hottest area.
Precisely. And the BOK explicitly said they wanted to avoid policy discord.
Yeah.
Basically, they don't want to be cutting interest rates, making borrowing cheaper, at the exact same time the government is trying to restrict borrowing to cool the market.
Yeah, that would be sending mixed signals, wouldn't it? One foot on the gas, one on the brake.
Exactly. They want to be pulling in the same direction.
So has this joint effort, the rate freeze plus the government cap, started to work yet? Any early results?
Well, the article does mention some tentative signs.
Yeah.
In the first week of July, so just after these moves,
Yeah.
the increase in Seoul's apartment prices apparently slowed down a bit.
Right.
It was 0.29% that week, which was down from 0.40% the week before.
Okay, so a smaller increase, still
Yep.
going up, but slower.
Right. And it was the second week in a row that the rate of increase had slowed.
Mm.
So it suggests maybe, possibly, that these measures are starting to have some kind of initial bite.
Interesting. Early days, but maybe a sign.
Definitely early days. But it's something they'll be watching very closely.
Okay, so they've hit pause on rate cuts for now, specifically because of housing and debt. But does that mean they're totally done with the idea of lowering rates? What about the broader economy?
That's the crucial nuance here. Despite this freeze, the BOK statement actually maintained what they call an overall rate reduction stance.
Ah, okay. So they're still leaning towards cuts,
It
eventually.
seems so. They still see downside risks to economic growth lingering. So it really is this delicate balancing act you mentioned earlier.
Trying to cool one part without freezing the whole engine.
Perfectly put.
So when might things change then? Is this freeze likely to last long?
Well, that's the million-dollar question, isn't it?
Right.
Or maybe the 600 million one question.
Huh, maybe.
The article notes that 4 out of the 6 members on the Monetary Policy Committee, these are the key decision makers, remember, indicated there's a possibility of rates going below 2.5% within the next 3 months.
Oh, within 3 months. So fairly soon, potentially.
Potentially. Most folks in the financial industry seem to be betting on maybe August or October for the next move, if it happens. But it really depends on a few key things.
Like what? What are they watching?
Okay, first, obviously, what the U.S. Federal Reserve does. Their big meeting, the FOMC, is at the end of July. What happens there often has ripple effects globally.
Always does. Okay, what else?
Second, how South Korea's own government spending plays out.
Mhm.
They have a second supplementary budget, basically extra spending planned. They'll watch how that impacts inflation.
Right. Could that spending push prices up again?
Potentially, yeah. And then, of course, the big ones. What continues to happen with housing prices and household debt levels, those factors that caused the freeze in the first place.
So they'll be tracking that data incredibly closely.
Absolutely. Those trends will be paramount in deciding the next step.
It's just such a complex juggling act, isn't it? You're trying to manage this huge household debt issue, cool down a potentially bubbly housing market, but also make sure the wider economy doesn't stall out. What really strikes you about this whole situation?
I think it's the specificity of the intervention. It's not just broad macro policy. It's a very targeted effort, seemingly coordinated between the central bank and the government, aimed squarely at this housing debt nexus.
We've just navigated a pretty complex situation here, really digging into South Korea's Economic Balancing Act. And it seems crystal clear that getting a handle on household debt and these potential housing bubbles is right at the top of their list.
Absolutely. Even while they know, they still need to think about supporting overall economic growth. It's not an easy position.
No, definitely not.
And that core tension is just so apparent, isn't it? How do you, you know, gently deflate an asset bubble, or at least stop it inflating further without accidentally choking off the broader economy?
Right. Pop the bubble without crashing the plane.
That's a good way to put it. And this situation in South Korea, it really is a fascinating real-time case study of that challenge. Very proactive intervention aimed at a very specific problem.
Yeah, it really is. And it leaves you thinking, doesn't it? You know, as so many countries around the world are wrestling with housing affordability, with the aftermath of maybe some excessive real estate speculation.
Yeah, it's a global issue, for sure.
What can we learn from this, from South Korea's really determined, multi-pronged approach here to tackle housing and debt head on? Is this specific freeze, this sort of wait-and-see moment they're in now, is that a potential blueprint for other places facing similar pressures? Or is it just a unique response tailored only for their specific circumstances right now?
That's the big question, isn't it? How transferable are these kinds of targeted policies? Definitely something to keep watching.